Bitcoin crashed, then it uncrashed. XRP did a golden cross, which sounds like a wrestling move, but isn't. Nearly 1 million people lost $3.8 billion on a meme coin named after a guy who says there's nothing illegal about it. And somewhere in Ireland, police just found 500 Bitcoins buried in a drug stash. Yeah, it's one of those weeks. Let's break down what actually matters and what's just noise in under 6 minutes. If you're new here, this is where we take the chaos of crypto headlines and turn it into something you can actually use. No hype, no to the moon. Just okay, some hype, but smart hype. Let's start with Bitcoin, which had the emotional range of a soap opera character this week. It dipped, jumped above 63K, then dipped again on weak US jobs data. But while traditional markets got spooked, crypto saw potential rate cuts and bought the dip. Meanwhile, Bitcoin ETFs snapped a brutal 10-day outflow streak with $222 million flowing back in. After days of questioning their choices, one good week, and suddenly everyone's an expert again. Analyst Tom Lee called this weakness window dressing. Funds tidying up their books. A convenient explanation, especially since his own company, BitMine, quietly bought $43 million more of Ethereum. Don't worry, this is fine. While buying more anyway. Bold strategy. While Bitcoin's having its moment, XRP quietly showed up looking incredible. It just completed a golden cross against Bitcoin, a bullish signal traders treat like a green light. And it's not just chart magic. Ripple's been on a tear, building an ecosystem for institutions to borrow against tokenized assets, stitching together credit, payments, and tokenization. A former US official even called XRP exceptionally important to the new financial system. And while many fled Bitcoin and Ether ETFs this week, XRP was a bright spot pulling in money. Capital didn't leave the building, it just went to a different room. Okay, actual biggest story of the year. Hiding in plain sight, tokenization. Securitize, backed by BlackRock, just tokenized 295 million of its own company stock on Solana and Avalanche, timed right around its NYSE debut. That's a company putting its own equity on a blockchain to prove it works. Stellar joined a major institutional stablecoin initiative. Robinhood's CEO said flat out, the future of crypto is real-world assets, not meme coins. Bold statement from the CEO of the company where people trade meme coins on their lunch break. But he's not wrong. Wall Street isn't tokenizing Dogecoin. It's tokenizing stocks, funds, and real estate. That's the actual institutional trend to watch, not the coin with a dog on it. Quick regulatory roundup, and stay with me, it's less boring than it sounds. Taiwan just passed a landmark crypto law, clearing years of legal fog. Canada's Webull just got approved for 24/7 digital asset trading. Tennessee and Georgia rolled out new crypto ATM rules. None of this makes headlines like Bitcoin to $1 million, but this is literally the plumbing that lets big institutional money legally show up. Clarity now, capital later. Remember that. Now, the reality check, because crypto never skips this part. Nearly 1 million investors lost a combined $3.8 billion on the Trump crypto coin. Trump himself responded with, quote, "There's nothing illegal about it," which is a sentence that tells you everything about how this asset class still operates in some corners. Shiba Inu crashed 24% in June, then rebounded with a mini golden cross and a 37% spike in trading activity. Basically a token having its own personal soap opera on a smaller budget. And Bitcoin experts are actually debating whether to freeze Satoshi's 1.1 million untouched Bitcoin because of quantum computing risk. Yes, the original stash. Even the founders' coins aren't safe from future robots. Lesson here? Tokenization and institutions are the serious story. Meme coins and celebrity coins are still the casino. Know which room you're standing in. So, in the next 30 seconds, here's your actual homework. Not financial advice, and always do your own research. 1. Watch ETF flows, not price. Flows tell you where real money is rotating before the charts catch up. 2. Tokenization is the structural trend. Stocks, funds, real-world assets, on-chain. That's not hype, that's infrastructure. 3. Regulatory clarity is a leading indicator. Places that clear the legal fog early usually get the capital later. 4. Separate the casino from the construction site. Meme coins and celebrity coins are entertainment. Tokenized assets and institutional treasuries are the actual building happening right now. And 5. Analysts say a real parabolic run needs something like $1 trillion in fresh capital. That doesn't happen from a good week of vibes. Watch the capital, not the candles. That's the week. Bitcoin having a mood swing, XRP stealing the spotlight, Wall Street quietly tokenizing everything in sight, and one meme coin reminding everyone why due diligence exists. If this helped you cut through the noise, smash that like button, subscribe, and I'll see you in the next one. Peace.